What's going on, guys? 360 Digital Closing Bell Daily Energy Market Summary episode. Holy smokes, it's number 136 here on this gorgeous Tuesday, October 13th, 2020. As always, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, international man of mystery, and in Denver for the week, Stuart Turley.
Hey, it's a beautiful day in the neighborhood, and I'm cold in Denver.
You're cold, man. It's actually hot outside. I've got fans going here in my office. You come to Denver, and we still have to shoot the slow in two separate places. But it was nice to see you this morning, Stu. And we have a great show for you guys lined up today. There's just a headline we have to cover. It's just too salacious for us not to dive into. It's about to make my head explode. We're expecting a little crude inventory draw, actually, from Delta, which is probably what's raising oil prices up today. We'll cover all of that. Panhandle Oil and Gas, as we mentioned, just bought some minerals. Now they're completely rebranding as a minerals company. Is that a sign of the future? We will dive into that. Stu's got some stuff in the international news desk. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube. The best way to stay up to date on all of your energy market news. When we look at the overall markets today, first, we just give a rundown of the industries, all down about 1/4 percentage point. Tech stocks stayed fairly flat. Real reason is there was this late stage coronavirus trial that was apparently going on by Eli Lilly's, whoever that is, but the FDA and U.S. regulators paused those trials. It'd be great. Just what I want to know. The vaccine that's apparently supposed to save me is now getting shut down due to safety concerns. Great. This also follows news of a Johnson & Johnson halting its coronavirus vaccine after a, quote, adverse effect was reported. Both shares of Eli Lilly were down 2.5 percentage points. Johnson & Johnson slid about 2.3 percentage points. Not good, and that's as we get into overall equity markets, guys. It's going to go as coronavirus does. Apple actually announced their iPhone 12. Stocks drop. Guess what, Stu? Next iPhone you buy won't have a charger or headphones. Are you kidding me? It's just another way to continue to scam us. I was watching this. It absolutely kills me. How are you going to give somebody a phone and not give them a charger?
That's why I use Android phones.
I should have made the switch. I actually just got a new phone. I'm just on a iPhone 12, or not 12, it's the 11 now. I should have switched when I had the chance 2 months ago, and I didn't, and now I'm stuck for 2 years. So you got me again, Tim Cook. Never again, though, I don't think. I don't know. I'll probably end up buying an iPhone again. I keep telling myself every day, but it just still kills me. The next iPhone I'm going to get doesn't – sorry, we're spending too much time on this. How do you not put a charger in a cell phone? That's like giving remotes. It's like you buy a TV and you have remotes that don't get batteries in them. It's like now I have to buy my own batteries. Just kills me. We move on to the crude oil market, which actually had a green day. If you were frustrated with the equity market, crude oil had itself a good day. 40.20, that's about a 1.8 percentage increase, about 75 cents on the day. Back into the curve, 12-month strip, 42.96. That's up about a percent, which is really good to see. So that long-term fundamentals seems to be holding well. Natural gas on the front side obviously is going to fall. We've been up heavily these past 3 days just because of Hurricane Delta. As some of that production begins to come online, we're going to see natural gas fall. So if you want to sell natural gas, you should have started doing it yesterday, but now's a good time to do it. $2.78. That's 3.5 percentage points on the downside. That back end of the curve, though, unchanged, still $2.98. That's about basically 75. So you can see that long-term fundamentals really unchanged. XOP, which are E&P Securities contract, of course, did worse than the markets today, 43.88. That XOP contract is going to go as stimulus talks cost. If there's a new payment protection program that gets rolled out, you're going to see XOP and E&P companies continue to rise because one of the biggest industries that got PPP, specifically OIH was another industry or OIH, which are oilfield services, was another sector that got it a lot. They're down 2.5 percentage points, 99.60. When we look at some of our biggest equity movers, downside, Ramaco Resources, they're down 10 percentage points. Sanchez Midstream, after being up heavily due to some stuff going on the Mesquite Energy side, who's technically the controlling partner, they were down 16 percentage points. Gulfport Energy down 29 percentage points. On the upside, though, good numbers. Camber Energy Inc., $1.14. They're up about 4.5 percentage points. New Concept Energy up 6.5, and U.S. Energy Corporation 9.8 percentage points. Stu, what's on the international news desk?
Holy smokes, we got us a busy week. Aramco CEO, see, look at this, Vanna White going on here, basically said the worst is definitely behind us. Global demand is at 90 million barrels per day with the economy concentrated in Asia Pacific. Pretty darn cool. But he said that it's not coming back until 2023. The worst is behind, 2022. Worst is behind us. Saudi Aramco, we like what they're doing. Okay.
We do, and Saudi Aramco is one of my favorite phrases we like to do on the show. Zig when everybody else zags. Generally, I like to, I generally follow. If the crowd's going one way, I'm honestly just going the other, just because that's how I work with. But I'm a big zigger, and I love people that do that. So I'm all for what Aramco's doing, and really kind of going in that opposite direction. Say, hey, we make crude at $5 a barrel. We're just going to do it.
Shout out to them. They're also doing business with one of our other friends of Intercom.
BlackRock. They're doing a $10 billion deal, which we'll be hearing some more fallout of that and for sure cover. But yeah, there's some really interesting talks in the works there.
Okay, here's another cool one. One of three this week, and it is with Lebanon and Israel are now in talks over their maritime border issue. This is huge. It's on our desk, and this is only one of three that I thought were coming out this week in peace talks in all of the disputes in the Mediterranean natural gas fields. That plays right on into this new BP article on the Trans-Adriatic Pipeline. It's taken 4 years to build, and of that 4 years, the link will bring 8 billion cubic meters per year to Italy, 1 billion cubic meters a year to Greece and Bulgaria. All of this is to get off of the Russian gas. This is playing into Italy. It's playing into this area. You have Turkey and Greece into the Mediterranean coming around in here. It's all about natural gas. It's all about trying to get a united front against Russia. OPEC cuts its 2021 prediction through the rest of this year, and demand will rise only by 6.5 million barrels per day to 96 million barrels per day next year. So OPEC cannot keep their herd in order or in line.
Really? That I'm so shocked, Stu. I'm so shocked that there are countries who agree to cut production and then actually don't. Who would have known?
No, OPEC really has no control over
OPEC. You mean NOPEC? Because they have no control.
No, we don't. They have no control. Back to you.
Talk about a busy day in the international news. I mean, really, Stu, you and your international buddies have been driving oil markets. We've been in Norway, Libya. Now OPEC is just running. I mean, so this, last week was an international movement for the price of oil. I think this week we're shifting back to that WTI price is going to be a lot more affected by some of the stuff that goes on in that U.S. First off, we're expecting crude oil inventories to draw about 2.3 million barrels tomorrow. API honestly, the API numbers just came out right now as we're recording this, so I don't know if somebody can pull it up, but we're expecting a little bit of draw. It'd be interesting to see what falls out from there on that sense. When I think what's that going to do, part of it is, we're looking at a week behind schedule. You got to remember when we look at these crude oil inventories, people, we're looking at a week behind schedule. So this is going to take into account specifically that production number. We're going to see that drop. We might even see a 9, depending on what comes in. We might see about a 9.99, 10.1 million, maybe even less than. We might even see 9.4, 9.5 million barrels. I know last week was 11 million barrels of U.S. oil production. We're probably, like I said, be down in that 9.5, 9.6 range. But it'd be interesting to see where that comes in. We're also expecting refinery utilization to dip probably below 77, which won't be terrible. Nice to see gasoline inventories fall, though. That's really going to help the price of natural gas. We ran yesterday that Panhandle Oil and Gas announced a minerals rights purchase going from an operator to a minerals company. Well, now they're rebranding themselves. They're called Phoenix Minerals now. And personally, I think this is something that you're going to see a lot more. Old legacy operators moving into the mineral space. Why, it's really nice to own minerals. Ask our friends over at Noble and Scott over at Noble Royalties. It's nice to own royalties. All of the upside with the cash, none of the operating expense. I mean, it's unbelievable. If I told you, Stu, you could make money by having somebody else do the work, would you be interested?
Absolutely. That's what my wife has been saying all these years.
So really the minerals game was probably if you're getting into it now, it's like getting into SPACs right now. You're just too late. You missed that wave. The wave to get in on minerals was probably 2-3 years ago, or really at the height of what we would call the shale boom. And speaking of the shale boom, I wanted to end the show on Panhandle, just changing them to Phoenix Mills. There wasn't really much going on. That it was a little sooner. We've got a couple M&A deals or bankruptcies that are probably going to come through. We're hearing some of the ticker, but I couldn't help but read this headline, Stu. So I'm scrolling through our news and I see this headline: Chevron to stay wedded to shale for incredible flexibility, CEO. That headline is just too salacious for me not to read and figure out. And I about fell out of my chair the first sentence. If you've listened at all to the show, specifically our long form podcast, you know that we're not anti-shale, but we're very skeptical. And one of our phrases is, show us the profitability. I don't necessarily care that there's oil. The question is that oil worth anything? And in 5 years as an investor, am I going to even make money? The overwhelming majority of shale projects, and yes, I am including the Permian in this, haven't made money. It is just, sorry, it hasn't. And no, it's just what happens. First sentence of this article. This is CEO of Chevron. Here's the first line of this article. Chevron CEO Michael Wirth on October 13th defended the company's commitment to shale and said its upstream portfolio would remain weighted towards tight oil and gas with fewer large non-shale projects in the past. What, Stu? What? These are the same cats that got us into this mess, and now they're saying, we're still going to do it. You're an integrated oil and gas company. You have the opportunity to pivot to become a midstream heavy. You have an opportunity to pivot to become a heavy downstream and really pick and choose what offshore oil wells you go to, where you go internationally. But no, we're going to go ahead and try to figure out if we can extract gas from Wyoming. Guess what, guys? I worked in Cody, Wyoming for a year. There ain't no profitable oil there. Go away. It's just unbelievable. He of course, he acknowledges a less enthusiastic outlook for the shale sector. Oh, you say, Stu? You don't say there's a less enthusiastic outlook for shale. You've absolutely got to be kidding me. I didn't even get a sentence into this article before I fell out of my chair and died. You saw the live reaction. Unbelievable. These are the same cats that got us into this mess, and now he's making people reapply for their jobs, yet he's committing to tight oil and gas. Maybe he should reapply for his job. Is he exempt from this? Because that statement, I don't know, Stu. I don't know.
I can't add nothing to that. Your rant was fun today.
It's the two Bobs. Now, Michael, what do you say you actually do here? If we're talking about, have you seen Office Space? Hopefully someone watched this knows Office Space. We're the two Bobs here. Now, Michael Wirth, what exactly do you do here? You just invest in unsustainable tight oil and gas projects? Great, you're hired. Might as well give him a raise at it. Fall in line with the rest of the industry. But we had to finish on that rant. I was unbelievable. I fell out of my chair when I saw this.
You just got a raise. You're now paid $2 a week.
Yes, there we go. That's what I'm talking about. Stu, is there anything else we missed today?
It's been a busy day. We got a lot coming down the pike.
We do have a lot coming down the pike. Stay tuned to the oil and gas, or the greatest website, www.oilandgas360.com, for all of your oil and gas finance news. But with that, guys, we're going to go ahead and let you get out of here, get back to work. For Stuart Turley, I'm Michael Tanner. Thank you for checking us out. Daily energy market summary here on the world's greatest website, oilandgas360.com. We'll see you guys tomorrow.